Hey guys, Dr. Jeff with debtfreedr.com. I've been asked this same question over and over again for the past month, so I decided to put together a quick video to talk about what we're seeing in the real estate market for 2021. So, given the past year of chaos in real estate and capital markets, actually, multifamily has actually fared extremely well, as we've only nationwide just seen minimal delinquency rates. But this has actually created a perfect storm of sorts as debt and interest rates have remained relatively stable, but cash has been, sitting on the sidelines looking for a safe home to find. So as capital has fled from other asset classes, many firms are and have continued to turn towards multifamily, and they'll probably continue to do this for the next year or so. So this has actually created cap rates to further compress. And now sellers of these properties are getting really, really high prices. So it's definitely a seller's market. So, given the amount of capital that's on the sidelines trying to find a home, many buyers are willing to take lower yields for the relatively safety of these assets. Well, you may be asking, why is that, Jeff? Well, other than the unwillingness to invest in some other sectors, many have also have huge concerns about inflation. Why? Well, look at what the government's doing. Every time you turn around, they're pumping out billions and billions and trillions of dollars. So they're also wanting to buy hard assets to protect capital as commodity prices are expected to rise and replacement value of these assets will, more than likely continue to go up as well. So all of this coming together has actually created a huge decline in deal flow for the investor willing to speculate for the future if they're seeking cash flow and yields versus others that are just wanting to park their capital on the side. So this is one of the main reasons why you really haven't been seeing many deals out there, many coming to your email inbox, is because of all of these things that have been going on. So that's been the major question I've been asked, Jeff, why have all the deals dried up? So given the aggressive prices that are out there, the vast majority of these deals getting done are via these bridge lenders. So agency debt leverage, which is secured by Fannie Mae and Freddie Mac, is not enough to cover the prices of property with debt service coverage ratio measurements that are falling well short. So what's happening now is buyers are using this bridge debt. So they're using the bridge debt models to bridge the gap to future values and increase NOI with the plan then to come back and refinance into some more longer term debt. So given the amount of capital out there with a higher forecast amount of inflation, this trend doesn't actually appear to be ending anytime soon. Well, you may be saying, well, is this speculative? Perhaps, but you know what? Only time will tell. So the $1 million question that we want to address is, okay, Jeff, if there don't really have many deals out there and the ones that they do come out are few and far in between. So for 2021, where is the next opportunity? So other areas that have been bruised and punished by the pandemic actually have created opportunity in some asset classes, such as this one, hospitality. That's right, hotels. So we've seen a huge rebound in the past 60 days, and capital markets are rapidly becoming available for hospitality, and spreads are actually declining weekly, making the combination of mild reduction in prices with more attractive debt. Um, we actually just got back. We've been to Texas about a month ago. We just got back from Florida a couple weeks ago, and depending on what area of the country that you're in, things are starting to open up. Think about it. People have been cooped up at home. They haven't traveled for the most part for the last year. They have all this money that they're being sent to them. They're bored. They're ready to get out of the house. Uh, you know, Some people haven't visited their family in over a year. My friend lives in Connecticut. He hasn't seen his family in almost 2 years, about a year and a half. And, you know, people are wanting to travel. So investing is all about seeing the opportunity while mitigating long-term risk. Okay, so you remember the great Albert Einstein, he said, in the midst of every crisis lies great opportunity. So we really feel that this year, 2021, could be the opportunity to invest in hospitality as we're seeing it um, growing more and more. Something else that we're seeing is these larger companies that own a lot of these hotels nationwide. Well, they took a beating last year and they're struggling for capital. So what they're having to do, they're having to let go and sell, a lot of their hotels because they need capital, and they're selling them at very very low attractive prices. So again, in the midst of every crisis lies that great opportunity, and we're seeing that opportunity this year in hospitality. I'm Dr. Jeff with debtfreedr.com. If you have any questions about possibly looking into this asset class for further investing, you can reach me at Jeff, Jeff, at debtfreedr.com. Take care.